Hey Leanne, thanks for having us out to the house last night. I finished my analysis this morning. Just want to walk you through it real quickly. And like I said, we do definitely have time for this. We've got Luke, who's just joined us. Actually, I'm using your house to kind of train him. So looking forward to working with you, and we'll do the best we can to get you out of the situation. Thanks. All right, so I'm going to walk you through all this, and I think that you're very prepared to kind of do a short sell if need be. And but I like to show people how I'm thinking and not just what I came up with, so that if you end up in a different situation later with an offer or something, we will know kind of where the other realtors are coming from with their numbers and stuff, and how I make my selections and everything. So this is your property, obviously. This is the total square footage. That becomes our multiplier. In other words, as we come up with a price per square foot, we're going to use these numbers, the main square footage, the basement, and then the total. And we'll get into that more in just a second, but we jumped through a lot of hoops on this. So this is the tax record. As you can see, even the upstairs square footage, which is the only thing listed here, is not the same. So you got 1,234 square feet, and then somebody has measured this on a prior appraisal at 1,300. See, that's the prior appraisal. They're citing the source. That's much more accurate than the tax record. So we're definitely going to take that because it's higher. As long as you cite where you got it from, it's buyers beware. And so we'll just use, when we cite it, we'll call it a previous listing. So going on to our comparables. Now you don't get to see just how much I've hashed through all these, because it takes me quite a long time, and you don't want to watch a 2-hour video. So these are comparable sales. When you see the square footage here is really low, so you're like, what is this guy doing? Well, what it is when I do I actually had the comparables for a house that has a basement about the same size as yours and upstairs about the same size as yours, but they were not very favorable for value. They're like $30,000 lower. So we want to try to avoid those, and rarely does that work out at all, because so many neighborhoods just have a mixture of square footage between the basement and the upstairs. So what we're going to do is we're going to try to take a value for the upstairs of the house and then add to it a percentage for the basement. And usually that number at the highest is 50%. But I am trying to get you that whole 50% because it's finished well. It's not like stained concrete or something like that. So as we hover over these numbers on the right, you're going to see the price per square foot: $85 a square foot, $89 a square foot, $115, and $123. Now, if these were accurate, we'd be so excited right now. But let's go through these. So you got a kind of an array of comparables here. This is the one for $115 a square foot. Very sharp house, as you can tell. You can tell by the countertops and the kitchen, everything. There's been a lot of remodeling that has happened here. So this really is a dollhouse, sold for the most per square foot you could really expect to sell for, and just a Donaldson neighborhood, with the exception of some very unique property. Or there's Bluefields, which just breaks all the rules there. So 115 a square foot is just a good number that you can just about throw around for upstairs square footage, new windows, things like that in the Donaldson area. So I could have shot from the hip with this one. Now, unfortunately, we're not quite at that condition of a property for our house. So let me scroll up here, and then this is the one for 123 a square foot. Now, this one is in your neighborhood. I do not have any photos of it. It's really hard to go through these. I can drive by and see what was so unique about this that allowed it to get such a high price, even if there's no acreage listed. I'm not really sure if they had a view or something like that. But when I come back to these numbers, sorry, computer's a little slow today. When I come back to these numbers and line them up, you're basically gravitating between this 90, 94, I'm sorry, that's the list price, 85, 89, and 115. I'm positioning your house. When I looked at this, it was actually a step above these two right here. So I'm positioning your house at about $100 a square foot. Averages are not very helpful in real estate, but that would be about in the middle of these comparable sales. Now, in reality, the appraisal and the value of the house is going to be determined in houses outside Mary Oaks. We got lucky that we got 4 good sales in Mary Oaks to help us establish value. But in this next one, we're going to go outside, and you just kind of figure somebody who's willing to live in Mary Oaks would be willing to live in a lot of these other neighborhoods. Clover Bottom, maybe not so much. But you can see their data for Mary Oaks is pretty consistent. This one's Clover Bottom, $61 a square foot, 94, 89, 100, 101. This kind of just confirms that we're locking down at about 100 is pretty accurate. And then we get into the 123s and all this stuff. Again, some of these we just went through, but the Mary Oaks ones, but if I were to say pull up Donaldson Hills, one of these higher per square foot houses, Donaldson Hills does have more of a name to it. I actually showed this house. She was actually my client, but only on the buying side because it was a divorce. So this had just this really awesome garden, and it was really well finished out house and everything. So they got a higher price per square foot and were in Donaldson Hills. So that, I think, as I scrolled through those and you saw those price per square foot, that $100 a square foot is, since we didn't have an exact comp in that range in Mary Oaks, shows that is a good number for you. Now what we do is we go into our active analysis or our competitive analysis. I just call it fantasy land. It means, we want to live part way in fantasy land because we want to make you as much money as possible. In this case, just get you out of your situation. Now these are crazy, but what this says is, what if I had a need to have a certain amount of square footage, and I started that at about 1,500 square feet, and I needed to be in a certain certain bedrooms, baths. So I started at 3 bedrooms, 2 bath minimum. And what you see is that if you needed that, your first option would be this one at 1,500 square feet, $164,000. Okay, well that doesn't give a lot of families quite what they need. 1,700 square feet, but it's on Hickory Bend. Just not a good area, not even the same type of people. So we're still looking good. Okay, now we get up to a house that actually would have similar needs, meet similar needs as your house, and we're already at $337,000. Another one right here for $150,000. This one does hurt us a little bit because I looked through this one, that somebody would be selling at this price on Lakeland. Parts of Lakeland are good, parts of it are not. But then again, you get into Twin Lawn. The neighborhoods go downhill or the prices get through the roof. So that means that other than this Lakeland house, we have a really good niche right now. And honestly, I'd take your house over the Lakeland house. So this one, what hurts us on this one is that it has all the square footage and everything upstairs and is only 150. However, I've shown this house several times. It is in a good part of this street and really close to your house, in fact, but it has this like separate apartment type thing and just tons of work that need to be done. So you've got this little, it smells like smoke. It's just really rough. So it's a great house for somebody. I keep trying to show it to clients who will do a little bit of work and have a good investment. So yes, it hurts us in a little bit, but at the end of the day, somebody who wants to do this kind of work versus somebody who wants to move in ready house like yours, not exactly a comparable. So that is a minimum needs approach. And then the next thing we do is a value approach, where we say, how much money do we have to spend? Say we got, and I actually started at $220,000 up to like 150. Down to 150. And what you find is this would get us our minimum 3 bedrooms, 2 baths in this price range. Our only competition is this one on Cabin Hill at 1,500 square feet. So man, you've got a great niche right here in the market where you are. So that tells me that we can really stretch our comparables as much as possible. Somebody needs a house to live in. They're not analyzing every comparable. They're just seeing what they can get for their money. And your house proves to be really good. So going through the market analysis here, based on everything we talked about, Basically what we have is that in reality, your house is worth 90 to 115 a square foot. Of course, I'm putting that right at 100. It's a little less than smack in the middle. If I were to be smack in the middle, I think we wouldn't be taking into account the galvanized piping and some updates that your house still needs. So positioning your house among my three most solid comparables, your house would sell for about $100 a square foot just for the upstairs, or that value comes out to $131,000. Don't panic, we hadn't had the basement yet. So now if we use that in this market, you can get 40 to 50% for a well-finished basement. Now push that to the top end at 50%. So that would be $42,000 we'd be adding to the value of the house. Now that brings your house in terms of a comparative approach up to 173. Now we want to spend our time going back to Fantasyland and break that down real quick. And Fantasyland says there's no inventory. There's virtually no homes to compete with our sales. So for instance, the Cabin Hill home or the Lakeland home. The Cabin Hill house, not the best part. That part of Cabin Hill is not in the floodplain, but there's a lot of people who would say, you know, I want to live in the interior of Donaldson. I'm not interested in living that far down. And especially on a street that has lots of duplexes and houses that were built in a floodplain. So I personally not a big fan. So I'm saying there's no houses to compete with us right now, so we can exceed comparable sales as much as a buyer is willing to, and an appraiser will give us the value. Again, we're not going to worry about the appraiser, try to get in his head right now, but we're going to cross that bridge later, particularly with the banks. They're going to be hard on us. So my suggested marketing price would go way up from the 173 all the way up to 189. Now, my marketing price is not what I think we're going to land at. I think that an appraiser is going to be hard-pressed to stretch the comps more than about 5%, which would get us up all the way up to like 180. So I'm going to start at like 179, hoping that, 189, hoping that we can land at about 180, even maybe north of 180. So that is, essentially where I think we should market it. I was hoping to come up with a price that said, hey, we could market it at the payoff, but by the time you add everything you're going to have to add to pad the price and get the house sold, by the time you pay all of your expenses, you would have to be not at 210, not at 215. You're going to have to be closer to like 220, 225, and that's so unrealistic that I say we just go for it and start with the short sale right off the bat. With 189, I think we can start getting offers, and with offers we can start negotiating the short sale. The only other option is to start at something ridiculously high and try to avoid the short sale, but we're just killing time is what I think. So that's my analysis. Feel free to share that with your friends, and you can get some feedback, particularly from Susan, and just see what she thinks. She's looking at all the same numbers I am. I just spend a lot more time with the actives and breaking down the basement and everything than most people do. So give me some thoughts on that. I got your loan information and everything, and we'll go ahead and get the ball rolling. And once we talk to them, we'll get that third party, the designated third party signed, and I think we may even have to notarize that. And it is a slow process, so hang tight. If you need an update, just call me anytime. Once we're actually on the market, I can start giving you updates based on every showing, and every week or two if we don't have any showing. So, but at this point, unless you just really want to know where we are with each little section of dealing with the bank, just hang tight and we'll start getting the ball rolling and get our third-party authorization so we can talk to the bank on your behalf. Hope that helps, and sorry that's a much longer video than most because of the difficulty in comping this house. So have a wonderful day and a wonderful weekend, and we will get started. Thanks.